Hello, welcome to Financial Insider Weekly. I'm your host, Michael Gray CPA. My guest today is Gregory Carpenter. Greg is the Managing Director for BTI Group Mergers and Acquisitions, or M&A, a business brokerage firm located in Campbell, California. He's been a business sale intermediary since 1985. The current focus of his business is on the middle market, valued from $5 million to $50 million. He was on the board of directors for the California Association of Business Brokers for 9 years. He is a frequent speaker about how to sell a business, and he is an arbitrator for the California State Bar and the Santa Clara County Bar Association. And today, Greg and I are going to talk about how to buy a business. So Greg, welcome. Thanks for being my guest today.
Oh, thanks for having me here.
Okay. Greg, what are some reasons that people have for buying a business?
Well, the number one reason is control. They want to be in control of their lives. They want to call their own shots. They want to be rewarded for their production. But the last few years, we've seen more and more people going to look for a business because they just can't find a job anymore.
Mm-hmm. Yeah. Tough time. And unfortunately, buying a business or getting into a business is a lot different from being in a job.
That's for sure.
Okay. So as we said, a lot of people have become unemployed as a result of the Great Recession that we've just experienced. Do you think that buying a business is a good solution for them?
Well, it is for some of them. If you're going to be the business owner, the buck stops on your desk for everything. I mean, everything from cleaning the toilets and watering the plants to going out and developing new accounts. And if you're not the kind of person who's going to take that initiative and run with it, if you're used to having a big support network around you that handles all those details and a boss above you who gives you your goals and then the resources to go achieve them, you might find yourself kind of avoiding dealing with your business and sitting around home in your robe drinking coffee till 10 in the morning before you saunter down to the office, and that's a surefire recipe for disaster. Having said that, a lot of people who have come out of the corporate world have been accountable for managing big business units and managing lots of people, lots of resources, lots of money, and have the skill set necessary and have the drive to go do it. And especially when they realize they really need to make that house payment pretty soon, it motivates them. So it depends on the person, their skill set, and their mindset.
Mm-hmm. No, and one of the things just to remember is that you're sort of the last person to get paid. Those employees have to be paid first, and you've got to pay your rent and so forth, and so then you sort of see what's left in the till, after all that stuff is done. Okay, well, why don't you compare for a moment buying a franchise with buying an independent business?
Sure. For the people coming out of the corporate world, a franchise offers a lot more structured environment than an independent business. Franchise takes the best things of a corporate chain operation and the initiative of the owner-operator who's accountable and combines them into a small business that actually, in general, does a lot better than an independent business. And in fact, some of the things that help it do better, of course, brand name recognition. If you're a McDonald's franchisee, doesn't matter where your McDonald's restaurant is, people driving down the highway know what they're going to be able to buy when they go in there. They know what they like and they know what works for them. They know the prices will be fair. They know it'll be clean. So you've already got a big advantage over somebody with the Brand X diner right across the street. The strangers won't know what's there. They don't want to take a chance. Franchises have corporate level business systems so that every transaction is accounted for and all the documents to track your business and manage all the critical aspects of it are available to the owner immediately, daily. Whereas in a mom and pop business, maybe the worst case scenario, and you as a CPA know more than anyone, some of your clients no doubt probably come into you with a shoebox full of receipts and say, here, do my taxes, right?
Well, I sort of screen those people out, but
but that's common.
Yeah, it is common.
And I've had business owners, when asked the question, well, what were your annual revenues last year? They say, well, I really don't know. My accountant takes care of that. How are these people managing their business?
Yeah.
You know, it doesn't make any sense.
They can't be managing their business.
That's right. Franchises also have something mom and pop businesses don't have, and that is market research and continual new product development. If you think, and McDonald's again is a great example. 10 years ago, it was all hamburgers and French fries and milkshakes, right? Now you go in there and you get snack wraps. You get a healthy snack consisting of yogurt and fruit and granola, and a lot of new products. They've got the McLatte and all the coffee bar products that are so popular. The snack wraps alone now account for 30% of McDonald's revenues. In a mom and pop business, they're still selling hamburger shakes and French fries.
So, but I'm just thinking now, I take it that in the franchise group of genre, whatever, there must be quite a range, though, as far as the support and the other things. In other words, just because it's franchise doesn't mean it's a magic bullet and this is going to be a snap.
All franchises are not equal to McDonald's, no doubt about it. And in fact, my company actually has a small franchise system that's for sale that at one time I think had over 50 drive-in hamburger places, and they're down to 4 now. And this business was owned by a person who followed in business school we called it the cash cow management strategy. They made no investment in new product development, upgrading design and facilities, upgrading their clients, expanding. They just let it run without much management at all and took the maximum profit they could, and one by one their franchisees finally went away and left them until now they're down to 4 stores. And they're thinking, well, gee, maybe now we ought to sell it. Well, should have sold it when it had 50 stores and when it was worth something.
I see. Okay.
So I would not recommend buying one of their franchises right now because you'll get no support. Their products are outdated. The look and feel and design of their facilities are 60s. And it's probably not a very good business to be in.
Yeah. So even when you're looking at franchises, you really need to do some due diligence, and we'll talk about that a little bit more, but when you're evaluating about doing it. Okay. So I'm in the market, I'm thinking of buying a business. Why should I think about working with a business broker when I'm doing that?
Well, number one, you'll get some education. My company has sold over 5,300 businesses since 1981. I personally have been selling businesses since 1985. I stopped counting at 350 sold, and that was a long time ago. So I've sold everything from a little beauty supply place up to a big manufacturing company, everything in between. I've sold a lot of businesses to individuals and a lot of businesses to big companies like Underwriters Laboratories and Deloitte. So I have a depth of knowledge about this narrow subject: business brokerage, business transfer, and business valuation. I serve as an expert witness for attorneys in legal disputes often on business valuation. And I can really help a buyer understand the benchmarks, understand what is market for this type of business, what's usual and customary in structuring an offer. And I can refer to him a whole network of accountants, attorneys, insurance brokers, and other professional advisors that they need to close that deal. I can also facilitate all their financing. I can basically prepare all the documentation package for underwriting and shop it to a whole bunch of lenders instead of letting them get chewed up in the SBA application meat grinder and go sideways for 3 months. So there's a lot of value we add for buyers. Also, we have in our company a very high standard for packaging all the information required. So if you go to some brokers, basically all they have is an agreement with the seller that they can sell it, and they really don't know much about the business. In our business, we're going to have 3 years of tax returns, the current year-to-date P&L and balance sheet. We're going to have a write-up describing the company, its employees, its customers, its products and services, its history, the owner's duties. We're going to have a copy of the premises lease. We're going to have an accurate copy of a list of all the furniture, fixtures, and equipment, and all the details about the company that they need in order to make a decision whether or not they'd like to own that business right away. So we save them a lot of time by having all that in place before we ever go to market.
Okay. So who usually pays the fee to the broker?
The seller normally pays the fee, although we also do work from time to time on a buyer representation basis too. And but I would say 99% of the time it's the seller, just
Okay.
like in residential real
Okay,
estate.
so just like when you sell your home,
Sure.
it's usually the seller that's going to pay. So does that create a conflict of interest for the broker?
No, not really, because there are a lot of moving parts in a small business, and nobody's going to know that business like the listing agent. And so all the people that work with the listing agent get the benefit of getting all that direct communication, and again, having our full disclosure package. But I would say roughly 95% of all small businesses are sold in a dual agent status, where the same broker represents the buyer and the seller. Now, we disclose that before we ever disclose a business, and the buyer understands what it means to have the same broker representing both parties, and we have them sign a disclosure and agreement that that is okay. And there's one exception to the full disclosure rule, that we have to tell each party everything about the other, and that is if a buyer says he'll pay more than what he's writing in his offer, or if a seller says they'll accept less than what they're writing in their offer, each party agrees that we don't have to tell the other. Other than that, we have the obligation of full disclosure, fair dealing.
Okay. Are there other professionals that are involved in this process of buying a business?
There are a whole circle of professionals involved, starting with the accountant, the CPA for the seller, who prepares the tax and documents and the P&L and looks through the company's books to get them in shape, to an accountant for the buyer, who would review all the financial matters about the business as part of the due diligence process. SBA lenders, bankers, and bank underwriters. There'll be insurance agents. You may need some special insurance because of a situation with workers' comp insurance, and some, like I sold a tree service. I mean, when you got a guy 40 feet in the air with a 36-inch chainsaw running 3,000 RPM, you better have some pretty good workers' comp, right?
Yeah.
And likewise, staffing businesses with hundreds and hundreds of people out in the field in all kinds of different companies. It requires some very special arrangements, or they can't even make a profit. And then, of course, business appraisers. That's a specialty too, and it has to be an unrelated third party. And with SBA loans, if the loan amount's going to be more than $350,000, the SBA requires that a third party appraiser appraise the business. So there's quite a range of people. They may have building inspectors, because if it's a triple net lease and the tenant's accountable to manage the building, if the buyer is taking on that responsibility, he wants to know what kind of shape it's in before he accepts that responsibility. So,
how about attorneys?
Of course, attorneys are involved. Did I skip that one?
Yeah, sort of the top of my list, and sort of got skated on by. But.
Yeah, even in a small business where the transaction documents are printed form documents like they are in residential real estate, it's a good idea to have an attorney read through. And usually there's an addendum or two, or a counteroffer or two, that has some language drafted by a broker that maybe the attorney should have drafted it, or maybe he should clean it up a little bit. And then it's not a bad idea to have your attorney review the escrow documents and just kind of oversee the process.
Well, another thing that accountants and attorneys can contribute a little bit is, structuring. In other words, what's going to happen? What is going to be the nature? Is it going to be a purchase of assets? Are you going to be buying a corporation?
Good point.
You're going to be forming your own corporation. You're going to form a limited liability company.
How are you going to manage the tax burden of the seller on the sale?
Yeah.
If it's a C Corp and it's selling assets, that's the worst case scenario.
Well,
In the worst case, maybe 3/4 of the proceeds go to tax. But if you manage it correctly, maybe it's the reverse, and 25% of the proceeds go to tax.
Yeah. So there can be, particularly when you've got a corporation acquiring a corporation or something, there are structures where there may be no tax. And so these are all things that can be a consideration, and that you really do need some specialized help for. Again, this probably isn't going to apply to the neighborhood grocery store, but not very many people are acquiring a neighborhood grocery store these days, unless it is a franchise like a 7-Eleven or something like that. All right, well, why don't we talk a little bit about the basic steps in buying a business?
Sure. Well, I suppose if it's an individual buying, the first thing he needs to do is take a good look in the mirror.
Yeah.
And maybe even ask his family members and his best friends for their opinions about whether or not they think he has the right mindset and personality and skill set to actually manage a business successfully.
Well, maybe even to ask their family or if they're willing to put up with it, because this may be something where they may not be seeing this person for
That's right.
a while.
You know, we used to have a joke sheet that went around 10 reasons why you should own a business. And of course, some of the obvious ones there, every one of these, of course, is false. First one was, you're going to be rich.
Oh, yeah.
And the second one is, you're never going to have to work again.
Oh, yeah.
The third one is, your family is going to be totally supportive of anything you need to do to make your business succeed, including working on evenings, weekends, and holidays, and remortgaging your house. And so, good point. You really should check with your family if this needs to be a joint decision, and your spouse and maybe even your older kids should all be involved in the discussion. Everybody should be on board, for sure. So once you've decided, okay, it looks like, hey, I'm probably going to be pretty good at this, and everybody agrees, then you probably need to understand, get some education somewhere, read some books, talk to some brokers, talk to people who have bought businesses. Try to figure out the benchmarks for valuing businesses, structuring the finance when you buy one, looking at your resources and saying, do I have enough money and could I qualify to get an SBA loan? Maybe talk to a banker, talk to some brokers and find out about financing. Look at all the various alternatives you have, and there are a lot of them. And then start looking for businesses.
Okay. And then once you think that you found a business, what are some things that you should be doing?
Well, the first phase really is just looking at a lot of businesses to try to get a feel for what makes sense and what doesn't make sense. If you go to, the most popular way to look for businesses nowadays is to go to the various websites like bizben.com, bizbuysell.com, bizquest.com. There are about 14 of those that have a lot of listings. And as you start reading through the various kinds of listings, you'll see that there's a wide range of prices. And there's also a wide range of disclosure or lack thereof about the earnings. And you'll start to see a pattern that most business sellers who aren't represented tend to ask way too much for their businesses, and they wonder why nobody's calling them. And they also refuse to disclose their earnings. So if you go to businesses that are listed with brokers, you'll find that the asking price is usually somewhat closer to what would be a fair market valuation. But you should also find more documentation available and more disclosure about the earnings and the nature of the business, what the owner does, and so forth. So it takes looking at and actually considering buying a few businesses before you start to get comfortable with your own judgment about what works and doesn't work, what's reasonable and not reasonable. And it takes like meeting the sellers, in-person tours of the business, as well as reviewing an entire pre-due diligence package. Then if you decide that you found one you really like and you want to make an offer, you probably should have professional help writing that offer. If not a broker, then an attorney. Although the broker is more likely to be able to write a market offer, in other words, terms that are usual and customary and would be accepted. Especially if he's a dual agent, he's trying to please both parties, he'll try to make something work for everyone. Attorneys, of course, by their code of ethics, are mandated to try to get everything they can for their client without regard to the other party's well-being. And so generally they ask for things that are like totally unreasonable. And the other person says, well, no, I won't do that. And then they don't have a deal. Meanwhile, the attorney's hourly bill is adding up. And so they're happy. The only one not really happy would be the client in that case. So brokers have an advantage in serving the client in that we only get paid when escrow closes. So we want to help you make a deal. If your offer is then accepted, then the first phase would be due diligence. And that's where you'd bring in your attorney, your accountant. You probably have your attorney do some background investigation on the seller and his business, find out if he's been in a lot of litigation, if he has a lot of judgments against him, or if he has a nice clean record, that sort of thing. And would you like to talk about the financial due diligence a little bit, since that's your area of expertise?
Well, gee, you had to throw that back to me, huh? Well, anyway, no, but it is a good idea to have somebody to look through to see, if you will, if it looks like there's some reality behind these numbers. So, You can go back through and look through the bank statements, and is there in fact revenue coming in? Does the money going out, what does it seem to be going for? The compensation levels seem reasonable. What kind of income can your client, my client in this case, really expect to be able to pull from this thing? What really seems to be happening here? Again, what's the reality behind the numbers as far as the operation, the marketing plans that are going on? Is there a customer list?
Yeah, well, in my opinion, it's essential to have a qualified accountant do this work, even if the buyer himself is a professional accountant, because he's not a disinterested third party and he is emotional about it. So he needs to have someone who's not emotional about it, who is a disinterested third party and has no vested interest in the outcome of the due diligence examination to give an opinion. And that's so important, that's critical. We have to deal with the landlord usually and submit the buyer's credentials to see if the landlord will approve him as a tenant. And if he will, then we either want to assign the remainder of the existing lease term or maybe extend it or maybe get a whole new lease, depending on the circumstances. And we need to arrange financing.
Yes.
And in this case, brokers will be a great help and speed up the process, because we will gather all the documentation that the bank's going to require from the seller side, and we'll work with the buyer to help him actually fill out the applications, provide all of his documentation. They usually want to see tax returns and brokerage statements and bank statements and maybe even the deed to your house and things like that. And we'll help him expedite the production of the whole package, put it all together and submit it to at least 3 lenders. Or if it looks like it's going to be a difficult one, I have submitted to as many as a dozen lenders.
Wow. And
if it looks like it's just not going to fly for an SBA loan, then we'll help him pursue other means of financing he might not have even thought of. Like when Congress created the qualified retirement plans, the IRAs, they also created a program to enable private individuals to buy their shares in their own corporations within their qualified retirement plan. And there are a few specialized qualified retirement plan custodians around the country that specialize in this program.
Right.
I sold a business in December that sold for $1.2 million, and the buyer funded most of the purchase using his own qualified retirement plan funds, and it was not a disbursement from those funds. The funds went into the corporate account, and shares of stock went into the qualified retirement plan and are held there now as an investment by the qualified retirement plan. So it's not a taxable event. 2 great things about that. One is you're investing pre-tax dollars as opposed to after-tax. 2, when he grows this business up to be much larger and eventually sells it, all that money goes into the qualified retirement plan. Again, completely tax deferred. There will be no tax due on that sale.
Yeah, you have to be very careful about doing that. I've actually got some interviews that I've done with some of these custodians that people could look at our website, financialinsiderweekly.com. But it is an alternative. It's a source of funds. There's a couple of things that I just wanted to throw in here because time is going. We've only got about 5 minutes left. Okay. But one is that tax-wise, there may need to be some sort of an allocation of the purchase price.
Right, we have to split the purchase price up among the various asset classes.
So there are now reports that are supposed to be submitted by the buyer and the seller. Right. And if they're different, then the IRS may be knocking on doors and asking why there are differences here. So
that's right. And of course, then, assuming we get through all our contingencies, we have to have an escrow.
Yes, right.
To do things like lien searches and bulk sale notices and prepare the legal documents and handle all the funds.
Right. And then there is another tax thing, and we've had this actually come up and bite us related to a sale that happened for a client years ago, and another CPA firm I was involved with, and that was there can be sales tax that can apply to sale of these assets. And so people need to get some background and get some sort of tax clearance related to that so that they know whether they're going to owe some money or not.
Sure. Well, that's one of the things that the escrow will do is they'll get a tax clearance from the Board of Equalization and the Franchise Tax Board and the EDD for payroll tax.
Right. Okay. Well, I think we've hit some good highlights here. And as I said, we're sort of getting down to the end. Maybe there's some final words of wisdom that you'd like to be throwing out for a minute or two here.
Well, it seems that to me, as I said, the biggest reason why people want to own a business is that they want to be in control of their own destiny. Now, for some people, when they first get into business, they think that means, well, I'm just going to work my butt off until I'm rich. But if you look at the graph of revenues of small businesses that people have owned for many years, you'll see a commonality in that it'll grow for the first few years, and then all of a sudden, mysteriously, it will flatten out and stay relatively flat or grow slowly. And the reason is that people ultimately achieve a comfortable lifestyle, which is really what they're after. They don't necessarily want to start the next Facebook. They just want to have a nice life. So when they get to the point where their business is throwing off more than enough income for them to have all the things that they want, they start valuing their time a lot more than they value more money. And they start running the business for lifestyle rather than more profit and growth and revenue. So this is the typical situation that we see, and it only makes sense that really, like the Bavarians say, we work to live, not live to work. So it's a mistake to let your business consume you and work, you know, like from 6 a.m. to 10 p.m. 7 days a week for years and years and years and not have a life. It's important to remember that the real reason you want to have that business is to have a nice life.
Okay. Well, that's pretty good words of wisdom. So folks, I hope we've given you some things to think about here today. It's really a starting point. And really, that's true with any show that I do, that it's to sort of point you in a direction where you can get additional help and get some of that guidance that you need, and to have an initial direction to go. Greg, thanks so much for being my guest today.
Thank you, Michael. I really appreciated being here.
Folks, we'll see you next time on Financial Insider Weekly.